And the MPC meeting, which is underway, many are expecting the benchmark interest to hold. What do you think will come out of the MPC meeting?
Yeah, thanks, Fenly. I think I hold the popular view about the MPC rate, the monetary policy rate. I think will be left unchanged at 6%, and basically the reason for that is not that I have a crystal ball, but basically based on fundamentals. The market is still very liquid, showing in the rates, both the bond yields and the interbank rates are at lows right now. Also, looking at inflation, which is one key index the CBN looks at while obviously tweaking its rate, has obviously come down to about 10.4%, which is the lowest so far this year. So looking at a bit of this, a mix of these factors, I think the central bank will probably hold its interest rate at 6%. And having said that, what I think the CBN would really be looking out to do in the current MPC meeting today is to look for ways to make sure lending starts again to the whole economy. And the way I think to do that is to sort of remove the incentive for people shifting towards risk-free asset. And in so doing that, it might sort of remove or lower the rate at which banks deposit with the CBN. That's my gut feeling for the outcome of the CBN Monetary Policy Committee meeting today.
All right, let's take a look at the results out of First Bank. Yes, it's been a rather difficult period for the banking sector in Nigeria, but why was First Bank's profits down by about 91% compared to last year this time?
Okay, for First Bank, really, I was impressed with the revenue figures, really. Looking at the 64 billion each quarter on the average, revenue, it was really strong. But my worry is really for the First Bank result, which is obviously leading to your question now. It's that the cost of funds is just so high. I'm worried that First Bank is taking expensive money, and I can't just understand why that's happening. And that's reflected in the net interest margin, which is dropped from about 65% to about 53%, in the current second quarter result. Also looking at its cost-to-income ratio, that's obviously escalated significantly to about 62%, which is the highest so far in this industry in this current year. And to now compound that, is the additional loan loss provision of about 30 billion. Considering that the First Bank has in the last financial year taken a provision of about 23 billion, taking total provision in the last 12 months to about 53 billion. I think that was the reason why the profit declined. And again, that's why a lot of investors are not happy. I think it's quite disappointing for a lot of them. And it's reflected in the share price performance today.
The company's non-performing loans and advances have increased 5 times compared to the same period last year. How is First Bank going to recover these?
Well, I can't say for sure how they're going to recover it, even though I know the CFO in the statement said a lot of they're stepping up their recovery effort to recover a lot of these loans. But I think as an analyst and as an investor, I think it's best to just assume that has gone for good and look beyond this and hope that the bank will strengthen the risk management practice and obviously tighten its policy in granting loans in the future, that we don't have a repetition of the past again in the future.
Well, it has a presence in 25. It has 25 branches across the world. How are those branches faring? For example, the ones in London, Paris, Beijing. How are they faring exactly compared to the one in Nigeria?
Well, I don't have the specific figure right now, to be sincere with you. But for a lot of banks in Nigeria, I know they're still struggling, especially in the UK office, to break even. And the reason for that is not far-fetched, really. It's hard to compete with the likes of HSBC, Barclays, Lloyds in the UK, considering the fact that they have the scale. Nigerian banks trying to go into these markets, obviously, I sort of question their business model for getting into these markets in the first place, because they're trying to bank Nigerians in diaspora, and I don't think the scale is sufficient enough for the number of Nigerian banks in that market at this point. But for First Bank specifically, I don't have the figure, so I can't comment. on their UK office making profit or not at this point.
Before we go, over the next 12 months, what should the company be focusing on?
As I said, I think a lot of banks are focusing on risk management and improving that, and I think First Bank, that's also key for them. For me, I think they should move towards reducing their cost of funds, really. I think that's eroding a lot of value in First Bank's financials at this point. Looking at it, if they can raise a lot of cheap deposit, not trying to do the numbers game and trying to be the biggest at all costs. I think focus on raising cheap deposit and growing your asset book competitively and also not carrying too much risk on your balance sheet. And I think that's where the focus in the next 12 months should be for First Bank.